What up, Hyperchange? Welcome to another episode. Today I'm going to talk about Chipotle's Q3 2017 earnings. Chipotle just reported earnings earlier this week. This stock has gotten hammered. It's now trading at 5-year lows. It went from, $3.20 a share to now $2.75 a share. So I wanted to dive into these results and figure out what happened. I made a couple episodes about Chipotle, why I think they should buy Sweetgreen and bet on the salad chain as a new disruptive growth method, but they haven't done that. And I put out another episode that said they should make the breakfast burrito. I tried the queso. So I'm getting into Chipotle here, and I was bullish and I was optimistic, but this quarter they flopped this quarter. The queso launch seemed to spike sales a little bit and then flatline. They're saying profitability was impacted by the hurricane. Maybe I'll buy it a little bit. Chipotle's restaurant level operating margins are looking like they'll never return to pre-health crisis levels. When they had that E. coli outbreak, they had to shut down all the stores, and the market is super disappointed. So let's dive into the results here to see really what's going on. On the surface, the numbers don't look that bad here. Revenue grew about 9% in the quarter from the quarter last year. Operating income was up 217% from only 10 million to about 30 million. So you're saying like, oh, these numbers are pretty good on the surface. Like they're growing profits, they're growing revenue. But remember, Q3 2016, the comparable quarter, was when they had all these food safety issues going on and business was awful. So they're going off a really low base, so it looks okay. Now, if we take the year-to-date results, you might be saying, oh, this also looks pretty good. Revenue's up 17%. Operating income's booming from flat to 200 million. But remember, guys, 2016 was in the midst of all these food safety issues. Chipotle business was in the dumps. They were making no money, so that's why it looks like they're doing so much better. If we pull into account the first 3 quarters of 2015, before all these health outbreaks broke out, you'll see that it's not even a question. Chipotle's revenue is still not as high as it was in 2015. The profitability has just been absolutely hammered. When you compare this to what the business was on a normalized basis, Chipotle's results are awful. And to make the situation even worse, look at how many restaurants they had. With only 1,931 restaurants, they were doing more revenue and more profit than they are with 2,374 restaurants. If we start looking at the per store unit economics, you'll see why this is so ugly, and you'll see why Wall Street is so pissed off at the results. The unit economics, aka revenue per store and operating income per store, from the first 3 quarters of 2015, normalized, the first 3 quarters of 2017, the new normal, it's falling apart. Chipotle went from being one of the most profitable restaurants in the entire industry to now like run-of-the-mill, below average store economics. Revenue per store is down 22% since 2015. Operating income per store is down 74%. This is the numbers that Wall Street's looking at. I was expecting Chipotle to bounce back significantly higher this quarter with a really strong amount of profits, maybe 100 million in operating income. They came in with 30 million. Frankly, a huge disappointment. And the fact that on the conference call, they started talking about things like, oh, we're investing in new menu items like salad and different stuff like queso. I think that's the totally wrong approach. I don't think Chipotle needs more menu items to make their stuff more confusing, to spread their employees thinner, to make the supply chain more complex. No, they need to double down on getting better quality ingredients, stepping up the quality of their food. It's not like they need to have salads at Chipotle now too. They should buy a salad chain and run that separately. Sweetgreen, that's why I made that episode. But so I'm just not convinced here. It's like, guys, the reason why no one's going to your stores is because the quality of your burritos is crumbling, not because they want a salad. It's like, there's salad restaurants to go get a salad. You're not going to beat them at their own game while also selling burritos. I went from a bull on Chipotle's turnaround to a bear after listening to the conference call. They sound like a bunch of executives who worked at McDonald's who are running this company. Like, they have no connection with real food, with passion. I don't know if that makes sense, but I'm just not convinced in any of their methods. Launch the breakfast burrito. You don't need any new ingredients for that. Maybe eggs. That's it. It's so simple. And then you could keep your stores open in the morning. The unit economics would shift. Double down on making what you have in your stores better. Launch breakfast if you're going to do any new products, not salad. Don't understand what Chipotle's management's thinking here. The numbers are not promising. Pull up the financials on a yearly basis. They got hammered when the safety issues occurred in 2016. Went from making, $4.5 billion, 800 million in profit to revenue's down to 3.9, no profit at all. And then I was thinking, oh, they'll bounce back really quick. But now with my new estimates, before I thought they were going to do 4.5, 4.6 billion in revenue, 400, 500 million in earnings this year. After this quarter, I'm only expecting 200 million in earnings, 4.4 billion in revenue. Profits are only a quarter of what they were pre-food safety issues. Revenue is still not to where it was, despite them having way more restaurants. Nothing's good about this, guys. Now let's go to the valuation. Even at the new price of 275 per share, with 28 million shares, they're trading at 7.7 billion. With my estimate of 4.4 billion in 2017 revenue, they're trading at about 1.75 times sales. Sure, that's super cheap relative to someone like McDonald's, who's trading at like 4 or 5 times sales, but Chipotle is super unprofitable. They're only going to make 0.2 billion in profit, and that puts their price EBIT ratio at 38.5x, which is still super pricey. And prior to this, remember, if I was expecting 0.4 billion in profit, my prior estimate, then at this price, they'd only be trading at 19 times earnings. But with earnings getting crushed, their valuation multiples go up, and now the thing's looking really expensive, even though the stock's down. You know, there's still a lot of hope for Chipotle to be able to pull off this turnaround. If they can ever get anywhere close to the money they were making per store pre-food safety issues, the stock has got enormous upside, and that's why I was so drawn to it before. But management is not instilling confidence. The numbers suck, and that is why the stock is down. It's plain and simple. You don't perform, you don't meet expectations, then the market's going to punish you. That's my opinion on Chipotle. I think they're investing in all the wrong stuff. Queso's not the answer. Breakfast burritos are. Acquire a chain like Sweet Green instead of buying back stock. They announced they're buying back more stock this quarter too, whatever. Anyway, that's Hyperchange. Love to know what you guys think in the comments. That's Chipotle's Q3 2017 earnings recap. See you guys next time. Subscribe if you haven't already. Peace.